Hello everyone, we have Pete Vander Valk of Aceland Mortgage in Bloomfield here with us today. Now Pete is a lender specializing in residential real estate. So Pete, can you tell us a little bit about yourself?
My name is Pete Vander Valk, as Angelo just said. I work with Aceland Mortgage out of Bloomfield, and I work with a lot of real estate investors. That's kind of been something that I've always focused on. So we have a large suite of real estate investor products. We handle residential purchases as well for your first-time home buyers, do refinances, all that good stuff.
All right, so something that is very popular in the news now here in Jersey is that New Jersey has voted to get rid of prepayment penalties on LLCs. So can you discuss a little bit more about that?
New Jersey has just gotten rid of prepayment penalties on LLCs. So previously with an investor, when you would purchase a property with an LLC, it was business purpose and you could apply a prepayment penalty. So it sounds like a good thing that they're not going to have prepayment penalties anymore. But when you look at the loans that they're going to be using, they're going to have a higher interest rate without a prepayment penalty. So people are going to have to switch up their strategies and plan for purchases and refis going forward.
Getting rid of the prepayment penalty, does that apply to non-LLC properties as well, or is it specifically if the property's in an LLC?
So you can still apply a prepayment penalty to a loan done through a S Corp or a C Corp.
So then as far as the one of the most popular loan products I know out there are DSCR loans. So can you talk a little bit about those and when they make the most sense for someone?
So DSCR loan stands for debt service coverage ratio, meaning that we're qualifying the purchase or the refi based on the cash flow of the rental property as opposed to qualifying on the borrower's personal income. So that works a lot with real estate investors because a lot of times they don't have a W-2 and they may write off a lot on their properties, and on paper it doesn't look like they make as much money as they do. So other things that could be a reason to use one is if an investor has too many Fannie or Freddie conventional loans out right now, they can use DSCR and still make the purchase.
All right, so it sounds like DSCR loans can really help people out who wouldn't conventionally qualify for a loan. So do you have like a specific case study of being able to help someone out that wasn't able to qualify for a conventional but could do a DSCR?
Sure. I actually have a couple. So one borrower, we just did a purchase for him a couple weeks ago. We closed, and he works a W-2, but he just switched jobs. So now you can't use the bonus income and overtime income that he gets. And all of a sudden, he has like midterm rentals on some of his properties. So his income on paper doesn't really look great right now. So what we were able to do is get him into a DSCR loan. And being that we qualify based on the purchase and not necessarily his income, we were able to get him into that loan and get the purchase done for him.
Cool. Now, sticking with the whole investor side of things, obviously I know you've done a lot of financing for people who are in the process of doing 1031s. What's your advice for someone who is doing a 1031 and getting their financing in order? Because as you know, time is of the essence with them.
So you obviously want to have your ducks in a row before you start the process. Nobody ever talks to the lender first, and they really should, but you want to make sure that you're going to be able to qualify for your purchase. You're going to want to make sure you have the 1031 set up with a qualified intermediary because you can't actually make the purchase yourself. It has to be through that intermediary. And you want to make sure that you are at least like looking at properties because you do have a time limit to identify a property and get started on that purchase.
Okay, and you touched on something really interesting as far as like the whole getting pre-qualified aspect of it. So is there anything that when someone, let's say they get pre-approval and they're looking to buy a property, anything that they should not be doing in that time period between pre-approval and getting the property?
So it really depends on the loan product that they're going to use, but general advice, don't make any big purchases, don't open up new lines of credit. Make sure you run everything by the loan officer first, because we've all heard that story of someone buys a car right before closing day and all of a sudden they can't close. That doesn't necessarily translate over to DSCR loans, but if you're looking at like a conventional investment property purchase, then you could be shooting yourself in the foot.
Yeah, I can. I just imagine the horror stories at the closing table there, where it's like, wait, you did what now?
Yeah.
So now you invest in real estate yourself, and you do it pretty interesting in that you passively invest in flips. So could you talk a little bit about why you decided to passively invest rather than actively, and also if for someone who's looking to get into passive flip investing, what would be your advice for them?
Sure. So I started investing passively in flips through one of my clients who's become a friend. I mean, he's an agent and an investor, and he needed a little bit of extra money on a purchase. So he asked myself and my wife if we'd be interested in putting some cash in with him on the deal. And he pays us a flat rate. So, for example, if he sells the property in like 6 months or a year, we still get the same amount of money. And with a flip, it moves quicker typically. So for him, it's great because he doesn't have to make interest payments or anything on that money during the process, and he could pay us out at the end. And for us, it's great because if he winds up getting done in like 2 or 3 months, then that makes our annualized return that much better. Because if you think about it from an annualized perspective, like let's say you're making 10% in the stock market in a year, that's 10% annualized. If you make 10% on a flip in 3 months, that's what, 40% annualized?
Yeah, actually, that might even be quite a bit more than 40%, just with the compounding of that 10%. So yeah, no, that's huge. Where it's very rare to get over 40% in the stock market. So unless you get real lucky with a stock. So where are you seeing that most of these investors are sourcing these deals from?
Real estate is great because everyone has their own strategy. So I have some investors who they're agents and they know their market really, really well. And some of them get listings that come up within their office, and before it even hits the market, they have an offer in on the listing. Some of them send out mailers. I have one investor who sends out bulk mailers to just a zip code, and he cycles through the entire zip code every month, and it's just a general letter that he sends out. He sends out, I think, 400 a month, and he gets 13 deals a year out of it. So, or 13 calls, 1 or 2 turn into deals.
Okay, which, hey, that's still a great ROI.
Yeah, exactly, yeah.
Yeah, and now not only do you passively invest in flips, but you also do some house hacking as well, which is something that I talk a lot about on this channel. So can you talk about your experience with house hacking and living right next door to your tenant?
Yeah, absolutely. It's been one of the smartest financial decisions I've ever made. My wife and I, we'd always wanted to get a multifamily property. I read the book Rich Dad, Poor Dad, like so many other people did. That really
That's
changed.
Actually, right there behind you on the bookshelf.
Really, it changed my mindset about investing and building wealth in general. And if you can eliminate or cut back your biggest expense, which is housing, then you're really setting yourself up in such a good financial spot. A lot of people buy the single family first, and really if you buy the multifamily first and then maybe another multifamily and then another if you desire, and then you get into the single family, that really, it sets yourself up. So I've had a great experience. Knock on wood, nothing really, really crazy has ever happened. But we bought our property in 2018. It's a 2-family in Bloomfield, and living next to the tenants is interesting. They're really nice people. It's the same as if you live in an apartment. Like they're people at the end of the day.
Now, do they know that you own the property?
Yes.
Or, okay.
Yeah. I know some people like to pretend that they don't own the property and maybe hire a property management company or something. But I don't know, is that really worth it or anything? Yeah, they know we own the property. We've had conversations with them at points in time where we had to raise the rent. And when you level with people and you get to know them, it's kind of like you need to keep in mind that it is a business still, but at the end of the day, they are people as well. And you can work with people.
Yeah, and that's something that I'd also like to touch on, where if someone wants to find out if you own the property, they will find out. Like my rental's in an LLC, and one of my tenants was able to find out who I am and even my address, which was kind of freaky. So if there's a will, there's a way.
Yep.
Now, switching gears into lending, I know you were mentioning that there's some misconceptions between private lending and portfolio loans. So could you talk a little bit more about the misconceptions and answer any of those questions that people might have on it?
Yeah, so a lot of like hard money lenders out there, they they say, oh, they're hard money, it's private money. People think that they make the end decisions, but at the end of the day, most of the time, unless it's like a person with a massive bank account that they're just willing to lend out, it's going through some sort of company or investment fund or something. There are going to be guidelines, and you may think you have an amazing deal, but if they don't, then they're not going to do the loan. So a lot of people think that private lending is something where one person can control it, and just be cautious because there's a lot of hard money lenders. I feel like everyone's a hard money lender nowadays that go out there to the meetups and networking events and everything, and they promise the world. And once you get into that process, it can look very different.
Now, I understand that you're a broker, and a lot of people sometimes ask, like, hey, what's the difference between a broker and a direct lender? So can you talk a little bit about that difference there?
Sure. So we actually do a little bit of direct lending ourselves, but we broker most of what we do. Brokering really gives us more options than direct lenders. And some direct lenders, they'll broker too, but as brokers, we are intimately familiar with each of the lenders that we work with. A direct lender is going to have one underwriting department. We have 80. So if this underwriting department underwrites differently than this one, especially in the case of non-Fannie Freddie FHA, where all the guidelines are going to be different depending on the lender, it really helps with flexibility if you have a unique situation to where we have more options typically than a direct lender. And the other thing is a direct lender will say that because it's direct, it's cheaper. But I mean, what about like Costco, the wholesale? You go and you get stuff in bulk. I mean, that's kind of like us. We are able to shop around for the best rate and the best terms for your particular situation.
Great, awesome. So yeah, I mean, it sounds like you guys do really great work over at Aceland, and I'm sure people want to know more about like where they can contact you, your social media. So please, go ahead and let everyone know how they can contact you.
So you can find me on LinkedIn, Peter Vander Valk. You can find me on Instagram at Loan Officer Pete. That's really the main ways. You can shoot me an email, pvandervalk@acelandmortgage.com. Give me a call, 732-552-6844. I answer calls, I take texts. Pretty easy to contact me for the most part.
All right, great. And we'll make sure to put all of that down in the description. So, Pete, thank you again for coming in and sharing all this information with us. Really appreciate it.
Thanks for having me.